President Trump hit Brazil with a 50% tariff, the steepest against any nation. Trump's politically charged tariff on the U.S.'s largest supplier of coffee.
This is something to definitely pay attention to because it will mean higher coffee prices.
Morning routines in America often begin with something simple, a hot cup of coffee. For many families, that first sip is more than caffeine. It is a ritual that sets the tone for the day. But even that small comfort is no longer immune from politics. After President Trump imposed a 50% tariff on Brazil, the world's largest coffee exporter, prices began to climb sharply. A pound of ground coffee that cost $6 last year now sells for about $8. For importers, invoices that once totaled $10,000 now arrive at $15,000. Small cafés say the extra cost could decide whether they survive. This is not an abstract policy debate in Washington. It is a daily expense that lands on the checkout receipt of millions of households. What was meant to punish a foreign country is making mornings more expensive in the United States. Coffee is only one product. When tariffs spread across metals, food, and manufactured goods, the impact becomes unavoidable.
Watch, the U.S. economy has a case of foodflation.
Coffee up nearly 15%, ground beef up just over 11%. Egg prices hit by avian flu are falling, but still up more than 16%.
There's no doubt Americans are paying the tariffs at this point.
The Bureau of Labor Statistics reports that wholesale prices for fresh vegetables surged at a record pace in July. Overall grocery costs are up 2.2% compared with last year. Coffee is nearly 15% higher, ground beef more than 11%, and eggs remain 16% above last year's level. Aluminum and steel tariffs, introduced in March, now show up in canned goods, beverages, and food processing costs. Wholesale inflation climbed 0.9% from June to July, the sharpest monthly increase since June 2022. Economists had expected only a modest rise, but tariffs have sped up the pressure. At first, large retailers absorbed part of the burden, but that cushion is gone. With supply tightening and costs rising, families face fewer choices and thinner budgets. If grocery bills show the hidden tax of tariffs, tourism shows how those policies ripple through entire communities. Canada remains one of America's closest economic partners, yet relations changed on August 1 when Trump raised tariffs on Canadian goods outside USMCA to 35%. In response, Canada has turned to diversify exports toward Europe and strengthen cooperation with Mexico.
What happens in Vegas could spell trouble for the U.S. economy. Empty streets and casinos.
It's slow. When I drive down the strip going to work in the morning and I barely see visitors out there.
The tariffs were meant to squeeze Ottawa, but they are already hitting American communities. Tourism shows the clearest effect. According to the Las Vegas Convention and Visitors Authority, total visitors in June fell more than 11% compared with a year ago.
President Trump's tariff announcements angering potential visitors like Canadians.
Used to we have lot for Canadian, and now no.
Flights from Canada dropped over 18%. Hotels, casinos, and convention halls counted tens of thousands fewer guests. In a city where a quarter of workers depend on tourism, the absence of Canadian visitors translates into real losses for restaurants, entertainment, and local businesses. What was designed to extract concessions abroad is instead draining revenue from America's own economy.
A vote for Trump means your groceries will be cheaper.
Trump promised tariffs would put America first. In reality, they are circling back onto American households and businesses. Coffee is pricier, grocery bills are heavier, and tourism is weaker. The weight falls inside the United States, where families and local economies bear the cost. Canada, meanwhile, is not yielding. It is adapting, finding new markets and holding leverage. This contrast shows tariffs are not forcing neighbors into quick concessions. Instead, they are exposing America's own vulnerabilities. The story of tariffs is not written in speeches, but in daily life. It is printed on grocery receipts, in tighter budgets, and in the empty hotel rooms of Las Vegas. What was billed as a show of strength abroad has become a bill handed to the American people.
You got some big name retailers, Walmart, Best Buy. You've also got companies that make everything from the shampoo brands that Americans use on their hair down to the shoe brands. Little by little, the costs of President Donald Trump's tariffs are starting to show here in the U.S.
When President Trump expanded tariffs on over 70 countries on August 1st, the goal was clear: bring jobs back, secure leverage, and force new trade deals. But within just days, the consequences are being felt, not in Beijing or Ottawa first, but in Detroit, Dallas, and the daily lives of American families.
One Detroit auto supplier says he's going to have to lay off employees and close a warehouse because of the president's tariffs.
Went to India to procure products from there, trying to save our consumers money. And now India is hit with tariffs. So everywhere we turn, we're starting to see more and more roadblocks. So it's been quite discouraging.
Major U.S. companies are sounding the alarm. In the second quarter alone, General Motors reported $1.1 billion in tariff-related losses. Ford followed with $800 million. Stanley Black & Decker, a key name in American manufacturing, projects an $800 million hit for the year. Apple, anticipating the impact, has already budgeted $1.1 billion in tariff costs for this quarter. These aren't isolated cases. They represent a broader trend across sectors. Retailers like Walmart and Best Buy have begun passing costs onto consumers. Items as simple as shampoo and shoes now carry silent surcharges. And it's not just speculation. Reuters has tracked explicit price hikes tied directly to tariff pressure. Even the morning cup of coffee might not be spared. The U.S. imports roughly a third of its coffee from Brazil, a country now hit with new tariffs. Economists warn that this could be the moment when the American public truly starts to feel the pinch.
As we're seeing kind of these sectoral hits and the impacts of tariffs really showing up in places like cars, vehicle parts, and energy. But energy dropped almost 20% in Q2. Obviously, that's going to be hard hit in Alberta as well as the rest of the country.
North of the border, Canada was hit with a 35% tariff starting August 1st, targeting goods not covered by the USMCA, including steel, aluminum, softwood lumber, and many auto parts. The impact is significant. In the second quarter of 2025, Statistics Canada reported a 13% drop in total exports, with energy exports down nearly 20%. This downturn hits Alberta hardest. Auto parts and consumer goods were also among the steepest declines. But rather than strike back with emotion, Prime Minister Mark Carney is opting for a different approach. Not retaliation, but repositioning. Canada isn't just reacting, it's adapting.
Now, Canada is looking to boost trade with its other North American trading partner, Mexico, as both countries try to work out a trade agreement with a volatile United States under President Donald Trump.
This week, Canada's Finance Minister, François-Philippe Champagne, and Foreign Minister Anita Anon traveled to Mexico City for high-level meetings. Their agenda: reinforce trade ties and reset diplomatic relations with Mexican President Claudia Sheinbaum. It's a calculated shift. Earlier this year, when some Canadian leaders suggested cutting Mexico out of the USMCA, tensions spiked. Now, the goal is realignment. With the 2026 USMCA review approaching, both nations recognize the value of mutual support, especially with Trump favoring bilateral deals. Notably, Trump granted Mexico a 90-day delay on additional tariffs. Canada received no such extension. This disparity has fueled Ottawa's urgency to solidify Mexico as a regional partner. In 2024, Mexico accounted for only 1% of Canadian exports, but officials see room to grow. Trump's approach is blunt force: raise tariffs, pressure partners, and count on American resilience. But the economic blowback is now quantifiable. In just 4 months, the U.S. manufacturing sector has lost between 30,000 to 40,000 jobs, according to U.S. labor data. Carney, by contrast, is choosing strategy over spectacle. His government is investing in trade diversification, protecting vulnerable sectors, and leveraging long-term relationships, rather than chasing short-term wins. It's a striking contrast. One leader fuels instability to force deals, while the other builds resilience to navigate uncertainty. From coffee beans to car parts, Americans are beginning to see the cost of tariff politics play out in real life. What started as a foreign policy tool is now cutting into corporate earnings, family budgets, and job stability. Trump's trade war may have aimed to punish competitors, but today, the collateral damage is accumulating at home. Meanwhile, Canada isn't waiting for Washington's mood to shift. It's building new bridges, and that quiet shift may turn out to be its strongest response yet.
In a social media post, Trump said, quote, "The August 1st deadline is the August 1st deadline. It stands strong and will not be extended."
President Trump announced a tariff extension for Mexico this morning, posting to social media, "We have agreed to extend for a 90-day period."
On July 31st, the White House stood firm. No country would get an extension. August 1st was the final cutoff. That's what the world was told. No delays, no exceptions. The U.S. would begin slapping 35% tariffs on goods from any nation that hadn't signed a new trade deal. But hours before the deadline, Trump changed his mind. Mexico got a 90-day extension. Canada didn't. This wasn't a small footnote. It revealed something deeper about how Trump's trade strategy is playing out and who it's really targeting.
Mexico is a very unique situation of all the other countries around the world because, of course, we share our southern border with Mexico.
The administration had spent weeks repeating that there would be no further delays. The tariffs were set in motion months ago and had already been pushed back once, from April to August. Officials said publicly that countries had time and the deadline would be enforced. But just before midnight, Trump suddenly spared Mexico. The reason? According to his spokesperson, Mexico is a unique case because of its shared southern border and recent cooperation on stopping drug and human trafficking. That framing sounds logical at first, but when Canada is brought into the picture, the logic starts to unravel. Canada also shares a long land border with the United States, over 5,500 miles, the longest undefended border in the world. The two countries are deeply tied through CUSMA, which still governs the majority of their trade. So why didn't Canada get the same 90-day grace period? Trump's team didn't offer a clear answer. What's clear, though, is that Canada wasn't even in the running for an exemption. Instead, the White House seemed focused on escalation. Just hours before tariffs took effect, Trump cited issues far outside trade, like Canada's recent recognition of Palestine, as a reason for breakdowns in negotiations. It had nothing to do with customs or commerce, and everything to do with politics. This wasn't about trade strategy, it was pressure politics, plain and simple. The same playbook Trump used on Brazil. Trump's decision to exempt Mexico wasn't rooted in a broader policy shift. It was a political calculation. While the administration framed it as a border issue, that logic crumbles under scrutiny. The U.S. has critical economic and security ties with Canada too, especially in energy. Canada supplies over 4 million barrels of oil per day to the U.S., according to the U.S. Energy Information Administration, making it America's top foreign energy source by far. Yet no exemption was offered. The real difference? Mexico agreed not to retaliate. Canada didn't. Prime Minister Mark Carney continued negotiations but refused to rush into a lopsided deal. And in Trump's world, standing firm doesn't earn you more time, it earns you a target.
Well, they have to pay a fair rate. That's all. It's very simple. They have been charging very, very high tariffs to our farmers. Farmers very badly. They've been treating our country very badly for years. And look, we like Canada. I love Canada. I have so many friends in Canada. But they've been very poorly led.
Despite the pressure, Canada didn't blink. Trump's move may have been designed to trigger panic in Ottawa, but it didn't. Officials stayed the course. No public outburst, no rushed announcement, no last-minute signature. While Mexico's deal is still undefined and its exemptions temporary, Canada is choosing clarity over chaos. Economists from multiple Canadian outlets have pointed out that over 80% of Canadian exports still flow tariff-free under CUSMA. That buys time, and more importantly, it gives leverage.
This guy will say something one day, and he'll wake up and the cheese slips off the cracker and then all of a sudden he goes the other way. And you're thinking, how do you deal with a guy like this?
What we saw on August 1st wasn't a rulebook being followed. It was one man's playbook, where deadlines bend, allies are tested, and pressure is personal. Trump gave Mexico more time because it fit his optics. He denied Canada that same time because Ottawa didn't fold. But trade isn't just about theater. And Canada's refusal to rush shows that it understands that. In the end, that calm might prove to be its strongest move yet.